Good morning, good afternoon, good evening from wherever watching me from. Welcome back to your channel, everybody. Today we'll be looking at how you're going to exit your trades. And many people enter trades without knowing when to exit. But as the old saying goes, you must always know your exit before you enter, okay? In anything you do, you must always know your exit before you enter. So that's what I'll discuss with you here in this particular video. You must know when to exit your trade anytime you enter a trade, okay? So looking at how to exit your trade when you are trading as a day trader. When you are trading as a day trader, you'll be facing a lot of emotions, okay? Some of the emotions will be like you are eager to enter a trade, you'll be rushing to enter a trade. But other emotions you're also going to face is after you enter a trade, you'll be rushing to get out, okay? Because you don't know where to exit your trade. So you face so many emotions, you get anxious, you get afraid. Is this trade going to my direction? Am I going to lose? And now you want to get out. And when you get out, you want to rush to get in. When you get in, you want to rush to get out. So you're facing all these emotions, okay? So always you must have a very predefined specific criteria there, okay? You must have predefined specific criteria. Okay, this and this is what I'm going to do when I'm trading. This is when I'm going to take my profit. This is when I'm going to take my loss, okay? And these emotions are very normal, okay? They are normal. They are normal psychological emotions you have to go through as a trader, and you are going to master it over time, okay? With experience, you're going to be able to master it. So you must also develop the discipline to also tell yourself, okay, I'm going to master all my emotions, okay? But before you can exit any trade, you must ask yourself, what is the strategy I'm using? Which strategy am I trading? Are you trading trend following, or you're trading reversals? If you're trading trend following, then you ask yourself, what is my risk reward? Which risk reward am I following? Am I following risk reward of 1:2? Am I following risk reward of 1:1, 1:3, 1:5, or 1:100? As we show you on YouTube, okay? But that one's not real, okay, guys. Don't follow them. So you must determine your risk reward before you can think of exiting your trade. And another factor you must also check is that your risk reward must correspond with your win rate. So for instance, if you have a win rate of maybe 50 to 60%, then you need a risk reward of 1:2 to become profitable. Okay. If your win rate is more than 50, 60%, 70%, then your risk reward, if you get even risk reward of 1:1.5 or 1:2 or 1:3, any of them can make you profitable, but minimum of 1:1.5 or 1:2, okay? But if your win rate is less than 40% or less, then your minimum risk reward should be 1:3, okay? 1:3 or 1:4 or 1:5. It all depends, guys. It all depends on your strategy. So your win rate must correspond with your risk reward. These are the things that make you a profitable trader. If you don't know how to correspond them, how to link them together, then you cannot become a profitable trader. Okay, so when people enter the trading market, they don't know all these things. They don't know all the factors that must work together for them to become profitable. Okay, so your win rate must correspond with your risk reward. The third point is that your risk reward cannot keep changing. Okay, you cannot change your risk reward. Cannot change your risk reward. Your risk reward must be consistent. Okay, your risk reward must be consistent. For instance, if you decide to take 1:2 per particular strategy, then always, every time, you must always be taking 1:2, okay? Or 1:2.2, 2.5. It should be around the same figure. You can't keep changing your risk reward. You can't say, today I'm feeling confident, I'm going to take 1:5. The next day I'm feeling sad, I'm feeling afraid, I'm going to take 1:1. Or the next day I'm feeling anxious, I'm going to, the moment the trade goes your favor, just get out of the trade. Guys, if you do that, you cannot become profitable. Your risk reward must be consistent, okay? So first, ask yourself, which strategy am I trading? The second one is what's my risk reward, and the third one is you must have consistent risk reward. So you must tell yourself, okay, this strategy I'm trading, I'm going to always take my profit to 1:3 or 1:2. If you get to 1:2, I'm out of the trade. That's all. If you get to 1:3, I'm out of the trade. I'm going to take my profit 1:1.5. If you get to 1.5, I'm out of the trade. Okay. So you take all emotions out of this whole scenario. You cannot be changing your risk reward. If you change your risk reward, you're going to mess up the statistics. Okay. Trading is a game of statistics. It's a business of statistics. So before you can even analyze your performance, before you can even analyze your trade performance, you must know your statistics. So anytime somebody comes to me, they want to be a trader and they'll be trading for some time, you can't make any money. I ask them, what is your statistics? What are your statistics? Show me your statistics. What is your win rate? What is your risk reward? You see, how many trades do you take within a month? All these things might come together. Okay, so guys, your risk reward must be the same. You cannot change it so that it won't mess your statistics up. Okay, so you must check your risk reward. You must check consistent risk rewards too before you can exit a trade. So if you're a trend follower, there are two ways you can exit a trade. You can either using your risk reward or using support and resistance areas. Okay, for instance, if you're a trend follower and you want to exit your trade, you can say, okay, I'm going to enter my trade here, and when my risk reward gets to 1:2 and I get twice of my risk I'm risking, then I'm going to exit the trade. For instance, maybe you decide to have a risk of $200 or your risk of $500. So okay, if the trade goes against me, I'm losing $500. But if the trade goes in my favor, I'm taking $1,000. Or if you are risking $200, you say, okay, if the trade goes against me, I'm risking $200. If the trade goes in my favor, I'm winning $400. If your account is small, you are risking $100. You ask yourself, if the trade goes against me, I'm risking only $100 to lose my capital. If the trade goes in my favor, I'm winning $200. So you can use that to exit your trade, either risk reward, or you can use swing high, okay? Because the market moves in swing high, higher highs and higher lows, higher highs and higher lows. So you can say, okay, I'm a trend follower, so I'm taking my profit at the next swing high. It means every time you enter that particular setup, you're going to take your profit at the next swing high. The next swing high is the area where there was a resistance and the market pullback. So before the market gets to that particular swing high, you decide to take your profit before the market gets there. But in case the market does not go in your favor, you must always lose the percentage you want to risk on your capital, okay? If you are risking $100, never pass $100. Don't go 105, don't go 150. Don't remove your stop loss and say, I want to move my stop loss down a little. I think the market will go in my favor. Guys, don't do that, okay? This is a recipe for disaster. Never do that, okay? Never remove the stop loss. If you say your stop loss is always $100, when the market goes against you $100, you are out of the market. Wait for another day, wait for another opportunity, okay? If you want to become a profitable day trader, then follow what I'm trying to do, okay? Follow my instructions and you become profitable. If you move your stop loss as a beginner, you move your stop loss, keep moving. One day your account will be empty, okay? So if you risk $100, make sure that always $100 that you are risking. If you are risking $200, make sure always you are risking $200, okay? And you take your profit 1-2 or the next swing high, okay? But if you're a reversal trader, then you must take your profit based on support and resistance. So for instance, if you're a reversal trader, you trade ranges, okay? You trade support and you take a profit at resistance, the next resistance. So you buy at support, you sell at resistance. So you must be watching all the major resistance zones, okay? If you're a reversal trader, you can't be using 1-2. You must always be checking the major reversal zone. Though you can use 1-2, 1-3, or 1-4, but the most important part is that because you're trading reversal, sometimes reversal can be very short, okay? Short range, sometimes can also be very high range. So if you're taking the profit, then you take profit according to the support and resistance zone. But make sure you always take your profit a little bit before it hits the resistance zone, because sometimes the market can nearly go to the resistance zone, about to trigger your profit target, and then reverses, and you hope it's going to sell, you hope it's going to buy, and then it reverses and hits you out, okay? So always take your profit a little bit before you get to the profit zone, okay? But if you are somebody who also wants to catch a very big move, then what you're going to do is that when the market moves in your favor, you move your stop loss to a break even, okay? When the market moves in your favor, you move your stop loss to a little bit higher, maybe a break even point. And then when the market moves again, you keep moving your stop loss, but don't move it too tight, because the market can come back, hit you out, and go to your direction, and then you get sad. Don't do that. So give a room, okay? Give room. Maybe you can say, okay, the market moves to my favor 1 hour, I move to my break even. When you move another 1 hour, 1 hour is the risk you are risking on your capital, okay? When you move another 1 hour, I move my stop loss a little up, like that, until you get to a point where now the market is trying to reverse and locks you out. That's if you want to catch a very big move. But I'm not a fan of that. I'm a fan of just having consistent risk reward. I always take 1-2, I'm out of the market. Sometimes I take 1-2.5, sometimes I take 1-3. Sometimes I even take 1-1.5, depends. But every strategy I trade, my average is 1-2. Always, if I'm risking $500, I'm taking $1,000. That's all. If I'm risking $400, I'm taking $800 or a little above $800. But I can't take less than twice of my risk. Okay. If you don't do that, you cannot become profitable. So guys, as you can see, you can't just enter the trade anyhow, or you cannot just exit anyhow. Okay. All these factors must come together to work together to make you profitable. Your risk reward must correspond with your win rate and also the frequency of your trade, okay? All these factors must come together for you to become profitable. So learn, analyze the market, based on your strategy. Ask yourself, where is the best time for me to take profit? And if you take profit and your price is too high, then it's going to reduce your win rate, okay? That's the fact about the market. If you take maybe 1-5, then your win rate too is going to reduce. What is win rate? Win rate is how much you win, how many times you win, and how many times you lose. Let's say you're taking 100 trades, okay? 100 trades within a month. So it's actually nearly possible, but at least I'm just giving an example. 100 trades within a month. You ask yourself, okay, how many of these trades are going to be losses and how many trades are going to be win? If you have 50 of them to be losses and 50 of them to win, which means your win rate is 50%. If you have 40 of them to be losses and 60 of them to be wins, then your win rate is 60%. That is win rate. For calculating sake, that's why I made it 100 so that you become clear with the calculation. Okay, so that's your win rate. So your win rate must correspond with your risk reward, as I said earlier. If they don't correspond, you can never become profitable. Okay, your win rate must match with your risk reward, and then net when you deduct the negative from the positive, overall at the end of the month you make your salary. You make 3,000 out of it. You make 5,000 out of your salary. If your account is big, you can make 10,000 profits out of the whole month. But guys, listen to this carefully. Don't listen to the guys who say they are taking $100 to $50,000 or $100 to $20,000. They are lying, guys. They're lying to you. They're not real. This channel, I'm just teaching you how to become a raw trader. Okay, I was a network engineer. I quit my job and I came home and I've been trading for some time. So I just decided to just start this channel to help anybody who's struggling out there. Okay, so if you have found the channel, thank God you found the channel, because you're going to learn all the truth about the trading. So you don't have to waste your time and live in illusion. Okay, so I think that will be all for this video. And I hope you are also going to rewatch this video again, watch it again, and become used to what I'm trying to tell you after you analyze the market and analyze it on your own way. What you think will favor you, what you think will favor your trading. Okay, so that will be all. Like, share, and subscribe to the channel, and see you in the next video. Bye.